Okay, so let's see. So in this video, I want to talk about different kinds of different ways that the government taxes us. Um, I have in this video, I'm going to talk about six different kinds of taxes. Maybe there are others, but for this video, I'll just focus on these six. Um, so sales tax, income tax, uh, fees, public debt, inflation, and price control. So sales tax is a charge on top of something, a product or service that you buy. Income is deduction from your income. Fees, if you if you make a flat payment for a product or a service, um, they're kind of considered optional. I won't even get to that. It's just, uh, it's a flat payment normally. Um, Public debt is when the government spends over their revenue, which they always do, to my knowledge. Um, and that is basically just a way of taxing the future. Inflation is a way of printing more money and thereby devaluing it. So they're taxing money away from you to spend it. And then price controls, and that's setting the price between two free will parties. Two parties agree that they're going to uh, exchange goods and services at a certain amount, and then government comes in as a third party and says, no, you have to charge more or you have to charge less or whatever. So my goals here, my goal is to start a conversation and to discuss what is the ideal tax plan. What would it look like? And I want to discuss this with all Americans from all walks of life, all political backgrounds. And then once we've talked about that, start talking about how to implement this plan in the best way possible. So let's talk about price controls and inflation. Well, there's not much that I have to say here about it. I think that both of these should be abolished, and I will try to put together a playlist to explain more about these below and why they're so bad. And then there's sales tax. I'm a big fan of the fair tax, and of course that's a form of sales tax. I'm in favor of one simple flat tax on all goods and services of registered businesses. This way, no good or service is taxed more or less than another, so it's fair. Only registered businesses would need to pay taxes. So how do we get businesses to register, and which businesses are going to be required to register? That's another topic for another video. But the way that we keep, in my plan that I'm proposing, the way that we keep the sales tax rate low is that we apply the sales tax rate to the income for elected officials. So if there's a tax rate of 7%, then if there's a sales tax rate of 7%, then we deduct 7% from the income for the elected officials, for the senators or the state assemblyman or whatever you have, and that's tax exclusive tax rate for those who are really into this stuff. And then there's income tax. Obviously, once again, I'm a big fan of the fair tax, so I'm pretty dead set against income tax. And I think that federal income tax should definitely be abolished, and ideally at all levels of government. However, if we cannot do away with income tax, the compensation should be that all the income tax brackets are added together and applied to the income tax for elected officials. So under the current system, the officials would be in debt. If you see you look at our current tax brackets, you have 10% tax bracket for those who make this amount: 10, 12, 22%, 24%, 32%, 35%, and 37%. So I added these all together, and it comes up to 172% income tax. So the idea is that it would give elected officials incentive to have fewer and lower tax brackets, which is good because lower tax rates yield higher tax revenues. And then there's deficit spending. So that's another way that the government taxes us. So how I would curb deficit spending in this plan is you apply the percentage of deficit spending to the income for elected officials. So when I say the percentage of deficit spending, I mean the percentage of the actual spending budget, which is above the revenue for that period. So if spending for a certain period is 4 million and revenue for that period is 3 million, then the percentage of deficit spending for that period is 25%. So, and just for reference, the percentage of deficit spending for the federal government for 2017 was 20%. And then there's fees. So fees, you have special products or services, court fees. In certain states, you have eviction fees that a landlord has to pay. All these different things. The revenue from these fees are added up, and they're compared to the GDP and expressed as a percentage and taxed. So, for example, if a certain government collected 1 million in fee revenue, and the GDP for that area, for that city or state or for the nation was 100 million. That's not a lot for a nation. But if the GDP was 100 million and the fee revenue was 1 million, so that would be, you would just add 1% to the income tax for the elected officials. So that about wraps that up. Talking about the different kinds of taxes and how this plan would try to curb those. If it doesn't make as much sense, hopefully this will start being fleshed out in future videos. I'm trying to make more of these and be more consistent with them. So I'm going to do the tax reform videos every other week. So if you want to check back next Friday, and we'll talk a little bit more about that. If you like this video, don't forget to give it a like, and like our page on Facebook and subscribe to us on YouTube. Like I said, check back here every Friday for new videos. We're going to be doing political philosophy and just general political philosophy on one week, and then the other week we'll be doing specifically tax reform philosophy, like this video here. Thanks.